Hello and welcome. This is BQ Prime. I am Agam Vakil. We're taking stock of the markets at the moment and what the technicals and the futures and options are indicating as far as markets go. Key benchmark indices certainly have taken a step back from life highs they made a few days ago. And at the moment, the question really is, are we looking at consolidation or are we actually looking at a downward trend, at least in momentary terms? But let's get in an expert to take a look at the markets and find out as to what their views are. We have Kush Bohra, who is the founder of kushbohra.com. And Kush, good morning. Thank you so much for joining in. Let's start with your view on the markets in general, and perhaps if you could also give us your call on the Nifty.
Hi, Agam. First up, thank you for having me on the show. It's lovely to be here. The overall view is that this correction's a little healthy. In fact, this is one of those corrections where the market participants were really asking for one, and the markets have obliged. So I don't think anyone's gone into the panic mode just yet. And if I see the mid caps and the small caps, which had probably cracked a little before, the large caps did, those stocks also have started to recover. So you'll see a lot of stock specific action, a lot of stocks rebounding from the recent drubbing that they had seen about a week or two ago. So I think it's still in a very healthy zone. I don't think anyone's pressed the panic button just yet. Of course, so much red on the screen is not really something that you want to see, day after day. And perhaps this is, I think, the sixth or the seventh day that, we are seeing the downward move. So overall, I don't think we are in, a lot of trouble yet, especially given the fact that we're correcting from the highs, and it's although a little protruded right now, but not too deep. But I would suggest that be a little watchful. Shorting opportunities from here probably could be a little late, at least on the indices. So we'll look for buying opportunities, but we'll let the falling knife arrest its fall. We'll let the dust settle, and then perhaps. So we're closer to the support zones and the resistance zones. So I will look for buying opportunities, but once the market and the indices settle down.
All right, fair enough. Well, let's also take stock of what's happening with the Bank Nifty. And, what we're actually looking at is that Bank Nifty really didn't hit that life high, or maybe barely just touched and, came off a few days ago. Currently, it is below the 44,500 mark. That's a level that has been on the radar for a lot of traders for, in fact, if I'm not mistaken, since the month of May. And while we did see some significant dashes moving above that mark, and in the 950 touching nearly 46,000 at one point in time, but we've started to see that weakness seep back. So what's the way forward here, Kush?
I think the rebound on the Bank Nifty will probably be a little faster, and I'll give you a reason for that. If you look at the hourly charts, the short-term charts, the Bank Nifty has actually gone into a slightly oversold category, the territory rather, which is slightly deeper than the Nifty itself. And that is where also, my confidence is coming that, perhaps a near-term bottom is around the corner. Now, you're absolutely right. 44,500 was a very crucial mark. In fact, the Bank Nifty spent about good 4 days trying to defend it before eventually breaking it today. So I think this is going to be a key resistance level on the way up. Not surprising, 45,000, which is a psychologically important mark, but also now has the convergence of its 20-day and its 50-day moving averages on the upside, will also act as a near-term resistance zone. So I think 44,500 to 45,000, this is a band which Bank Nifty will perhaps have to test and clear before it sort of makes a move towards 46,000 plus kind of levels. So in the near term, I am looking at 43,900 kind of a level, which should act as a near-term support. Because if I dial the clock back a little, if I go back somewhere close to end of May, beginning of June, the Bank Nifty spent a considerable amount of time within this 43,500, 44,000 zone before it started to move up and made that all-time high close to 46,000. So I think here we could expect a rebound close to support zone of 43,900. As I said, I am looking for buying opportunities, but I won't be the first one, or I wouldn't jump the gun. I would let the first bounce come in, and that's when I will look at entering from here. As I said, the shorting opportunities are perhaps a miss at these levels.
Right, fair enough, Kush. Let's also take a look at what's really happening and what's really buzzing as far as stock futures go. And while overall we've actually continued to see a lot of traction of late in some of your large cap names, including those in the Nifty. Every now and then we also see some very large moves as far as your mid cap buzzers go. But for now, we are looking at significant weakness in Vedanta today. ICICI Bank, HDFC Bank also dragging the bank Nifty down in today's day of trade, and NTPC is also showing a little bit of weakness. That's as far as some of those active stock futures go from here end. But Kush, are you seeing any stocks which are coming into your radar in terms of potential trades, and how would you play them?
Sure, a couple of them. And before we move to that, a quick word on what you just mentioned. Some of the stocks in the banking space haven't been doing well. I think HDFC Bank for now it seems like a done and dusted story. I don't think there is any fresh trigger in that. So I think not much is expected out of that. But what you rightly mentioned, the likes of ICICI Bank, and I would like to also add, the fact that even SBI, the PSU, big gun that was actually doing very well, the entire space was doing very well, has now sort of gone into a bit of a consolidation mode. This is the bigger worry, and hence you're seeing the rub off on the banking index, the bank Nifty as well, where ICICI and SBI are not participating, and as I said, HDFC, not too many hopes on that, at least in the near term. That could perhaps keep the bank Nifty under check. So that is something that I will watch for. Incidentally, both of these stocks are closer to their support zones, so just confirming the theory that a near term bottom may be around the corner. Now, as far as stock specific action go, see, we've seen a couple of stocks actually do very well even in this kind of a downturn. One of the stocks that's on my radar for a while now is actually UPL. Now, I know the stock has actually underperformed for a very long time, but this is perhaps why it's on my radar. This is a trigger. This stock made its bottom way before the market started declining. So 580, 590 kind of zones where the stock had a strong support, and it's rebounded from there. Although it's in a bit of a pressure, but that's more in line with the markets, and it's respecting its near-term averages, the 20-day moving average, the 50-day moving average. So I think once the markets settle, this stock has a lot of catching up to do with its peers, in this space, which have already run up quite sharply, about anywhere from 10 to 20%. So I think for the next series, for the October series, UPL is one stock that I have on my radar. For a near-term pick, I would have 635, 660 kind of levels as my target. And on the downside, 580, where the stock actually rebounded from, is where I would place my stop loss. So this is, one pick that I have on the long side.
All right, Kush. Well, that's your view on the markets, and we'll leave it at that. Thank you so much for joining in and taking us through your views. But for now, of course, subdued trade as far as the benchmarks are concerned. And we're going to have to continue to see whether or not we see more weakness or a little more consolidation coming through. But for now, we're signing out. But there's lots more lined up. Stay tuned to BQ Prime.